Hi everyone, welcome to today's webinar, Understanding Credit in Canada. My name is Abigail and I work with our partners here at CanadaVisa, and I'm very excited for the partner that we have with us today to present to you from TD. So we're going to start this webinar with a presentation from Jackie from TD, and then after the presentation, we'll have our question and answer period, which will give you the opportunity to interact with the content and with Jackie. And I know a lot of you have submitted questions prior to the webinar, so we've planned to answer as many of those as possible. And please continue to ask questions in the chat throughout, and our team will pull those questions out and we'll try to get to as many of them as possible. So I'm just going to pull up our slides now. Okay, and I'm very happy to introduce you to Jackie. So Jackie is a manager of program support at TD, where he supports the New to Canada segment, helping improve how newcomers access banking and receive advice in Canada. He's known for translating strategy into execution and driving measurable growth at TD. With over 14 years at TD, Jackie has led high-performing branches across Vancouver, consistently delivering top quartile results. His leadership has been recognized with 8 TD Legends Awards and the prestigious Vision in Action Award of Distinction. So we're in very good hands today, and we're very lucky to have you, Jackie. And outside of work, Jackie's a proud father of 2 daughters and enjoys hobbies like weightlifting and golf. It sounds like you're very busy. Okay, so with that, I'm going to pass it off to Jackie. Just a note, please remember that the chat is public, so don't share any personal information there, but do continue to ask your questions throughout the webinar. So Jackie, I'll now pass it off to you.
Awesome. Thank you, Abby, for the introduction. And good morning, everyone, and welcome. Thank you for joining today's session on credit. My name is Jackie, and I'm thrilled to be here with you as you begin your exciting journey in Canada. Over my 14-year career at TD, one of the most common questions I get asked is, how do I access credit or build credit? Today, our goal is to make credit in Canada feel clearer and simpler to understand. Our agenda today is going to cover the topics on the screen here. What is credit? What is a credit card and how does it work? How is interest calculated? How to build your credit history, especially as a newcomer? How is your credit score calculated? Understanding the difference between a secured versus unsecured credit card, and understanding credit card fees and if credit cards are right for you. Before we jump into our agenda, let's answer the million-dollar question. Why is credit important, especially in Canada? Building credit in Canada isn't just about getting a credit card or a loan. It's about creating more options for you and your family. Whether you're looking to buy a home, finance a car, pay for school, or manage your day-to-day expenses, understanding how credit works can help you make informed decisions and can open doors to new possibilities. Credit is more than just a financial tool. It's one way to show reliability to lenders and, in some cases, landlords. By using credit wisely, you can build a strong credit history, which helps you access the products and opportunities you may need as you settle in Canada. Throughout the session today, I'll share practical tips and examples. And as Abby mentions, we'll save some time for Q&A towards the end of the presentation. So let's get started. First, let's take a look at what is a credit card and how to use it. Some of you may have used one before, and for others, this may be new. Think of credit card as a short-term loan you can use for everyday purchases. You borrow the money to pay for something now and then pay it back later, usually on a monthly cycle. Every card comes with a spending limit, which is the maximum you can use during that period of time. If you do go over the limit, the purchase may be declined or you could be charged an extra fee. Therefore, it is critical that you keep track of your spending limits to avoid paying additional fees. If you don't pay off your full balance by the due date, interest will be charged on the amount you still owe. Interest rates may vary, so it is very helpful to speak to an advisor and find a card that fits your needs. Most cards also include a grace period after your billing cycle, and your statement will show the exact due date and amount to be paid. If you need cash, you can complete a cash advance with your credit card at an ATM, or transfer the funds from your credit card to your account through your mobile app. Please keep in mind that interest typically starts right away for cash advances, and there may be additional charges. Credit cards can also come with benefits like rewards, cashback, purchase protection, and help with unauthorized transactions. More importantly, using a credit card responsibly is one of the main ways to build credit history in Canada. And we'll talk more about that later during the session. So let's go over why a credit card can be a helpful financial tool, especially as you settle into life in Canada. Before you apply, it's worth asking, is a credit card the right fit for you right now? If you typically live within your means, have reliable income, and feel comfortable following a budget, you are already starting off from a strong place. So what makes credit cards useful? Well, credit cards are much safer and more convenient than carrying cash. You may be able to earn rewards or cash back on everyday purchases. They can make it easier to track spending and stay on top of your budget. And importantly, responsibly used can help you build credit history in Canada. So when used carefully and paid on time, a credit card can support your financial goals and help you access more opportunities over time. Now let's talk about interest, something that can add up quickly if you're not paying close attention. If you don't pay your credit card balance in full by the due date, interest is charged on the amount you still owe. Interest continues to build until that balance is paid off. Your interest rate can vary based on the type of card that you have. For example, different lenders and types of transactions may impact this. Many credit cards in Canada fall roughly in the 19 to 30% range. The good news here is that for new purchases, you usually get a minimum 21-day grace period with no interest, unless it's a cash advance or a balance transfer. If you pay the balance in full before the grace period ends, you can avoid interest on those purchases. Understanding how interests work can help you make informed decisions and keep more money in your pocket. So let's break down how credit card interest works with a simple example. Imagine you have a credit card balance of $1,000 and an annual interest rate of 20%. What does that mean in a real life setting? Well, if you take that 20% annually and you divide it by the days of the year, your daily interest rate would be about 0.55%. It sounds small, but that interest could add up over time. That interest works out to be 0.55 or 55 cents of interest per day. Over a month, that is roughly $16.43 in interest charges. Here's what surprises many people. If you only pay the minimum payment on that $1,000 balance, it could take you almost 11 years to pay off the credit card. Or you could pay additional $990.60 in interest alone. So the takeaway here is, when possible, pay the balance back in full or at least more than the minimum. This will save you money over time. Now let's move on and talk about how we can build your credit score in Canada. The everyday choices you make with borrowing and payment will shape your credit history. The more you understand what helps, the easier it is to build and maintain a strong score. Here are a few practical habits to keep in mind as you start to build your credit score in Canada. First, pay your bills on time. This is one of the clearest ways to show reliability. When you can, pay more than the minimum payment on your credit card. even a little extra can make a difference. Be mindful of how often you apply for credit. Many applications in a short period of time could be seen as a red flag to lenders. Start building credit history early, and responsible use is often better than having no credit history at all. And lastly, avoid using one credit product to pay off another. It can become a cycle that's hard to break. Step by step, these habits can help you build trust and create more financial options in Canada. So now you might be wondering, how is your credit score calculated? You can think of credit score as a snapshot of your financial track record. Lenders use this to help decide whether lenders use this to decide whether to approve credit and what terms to offer. The good news here is that your credit score isn't permanent, and it can change over time based on your financial habits. Your score is influenced by several factors, such as your payment history, how much debt you carry, how long have you had credit, how much of your available credit you use, how often do lenders check your credit, or any public records, such as bankruptcies or collections, which can significantly affect your score. When you understand what goes into your credit score, you can take practical steps to build and protect it over time. Now let's take a look at two common types of credit cards you may hear about as you start building credit in Canada: the secured credit card and unsecured credit card. The two credit cards work in similar ways, but there's one key difference. For secure credit cards, it requires a deposit as collateral, and your credit limit is typically equal to that deposit. This is a good option if you're new to credit in Canada or looking to build credit. An unsecured credit card requires no deposit as collateral. You simply apply, and if approved, your credit limit is based on your overall financial profile. Depending on your newcomer status, you may have options to apply for unsecured credit cards and even without Canadian credit history. Eligibility and limits do depend on the lender and your personal circumstances. Whichever option you choose, the goal here is the same. Use the credit card responsibly and make payments on time to build a positive credit history in Canada. So let's talk about something that often catches people by surprise: credit card fees. Besides the annual interest rate, there are a few other charges you should be mindful of. Annual fees. So some credit cards come with a yearly fee, especially those that offer special rewards or points. Think of it as a price you pay to unlock extra benefits. Cash advance fee. If you ever use your credit card to get cash from an ATM, you'll pay a fee each time. Plus, the interest starts building right away. Over limit fees. If you spend more than your credit limit, you might be charged with an over limit fee, and that is a good reminder to keep an eye on your balance. And the lastly is foreign exchange fee. Planning to travel or shop online from another country? Well, you can use your card for purchases in a foreign currency. However, your bank may charge you a conversion fee and apply their own exchange rate. Knowing about these fees can help you choose the right card and avoid unexpected costs. If you ever have questions about your card's fees, please don't hesitate to ask your financial institution for additional details. So, after learning about all the types of credit cards, fees, and how to build a healthy credit history, you might be wondering, should you get a credit card? Well, the bottom line here is, if you feel confident you can use one responsibly, a credit card can be a helpful tool, especially when you're new to Canada. When managed well, your credit card can support you in a few ways. It helps you build credit history, which can matter for future financial goals in Canada. You may earn reward or cashback on everything you spend. You can set up pre-authorized payments to help with bills and to stay on time and stay organized. And in some situations, a credit card may be required for certain transactions or security deposits. The key here is to use your card wisely. Pay it on time, keep track of your spending, and borrow only what you can comfortably pay back. And with that, I will pass it back to Abby for questions.
Great. Thanks so much, Jackie. Okay, so we have a lot of questions to get through. We'll try to get through as many of these as possible. To start, what are the minimal requirements to start building a credit score in Canada?
Yeah, that is a great question. So the short answer is you need to meet the minimum age of majority criteria in your province. And with proper identification, you can go into any lender, any bank to apply for a credit card. As long as you're approved, whether it's an unsecured card or a secure card, you will be able to start building your credit score right away. The only exception is in Canada, if you sign up for a phone bill, like a utility bill, that is the only other item that can start building credit right away. And oftentimes for newcomers, they tend to start with that. Oh, sorry, Abby.
Oops, there we go. Can you hear me now?
Yeah.
Okay, great. The second question was, can I build a credit without having a full-time job?
Yes. So having a full-time job does help because it shows the lender that you have reliable income. Now, if you have a part-time job, or if you're a student, or in different circumstances as a newcomer, you can start building credit without a job. The approval may be more challenging, or you may need to start off with a secure credit card first to show that you are able to repay back the credit.
Okay, perfect. And then we got a lot of questions about how credit in other countries affects credit in Canada. So one person asked, how does one of the good credit score history in the US establish credit history in Canada? Does that have an impact?
Yeah, that is a great question. So when you come to Canada, it's generally considered a clean slate. So you're new to the country, you're starting off fresh. Now, in some circumstances, you can use your credit bureau or credit history from a different country to prove reliability, but lenders often don't ask for that unless you are looking to apply for like a mortgage or more of a secure credit versus simply a credit card.
Perfect. And then how do those lenders evaluate newcomers with limited credit history? What kind of things are they looking at?
Yeah, so for newcomers, for certain banks, if you're brand new and you don't have any credit history, they will often give you or be able to grant you an approval with a small limit. So whether it's $1,000, maybe $500, you can get an unsecured card approved. However, if you already have established credit, maybe through a phone bill or already have a credit card elsewhere, typically your income and the consistency of that, as well as your assets, will play a huge role for your credit approval. Now, if you do have limited credit history, I would strongly recommend getting a secure credit card to start building your credit history early. And for credit history, unfortunately, isn't something that you can do it quickly. It does take a long time to build. So the key here is to start early. And if you need to do a secure credit card, do so, because over time, then you can show reliability, then you can remove that security at a later point.
Perfect. I'm going to jump to a question from the chat because I think this is an interesting question. So someone asked in the chat, I would like to know if you never borrow from your credit card, is there any impact? So can you speak a little bit to also just how much of your credit limit you should use?
Yeah, so that's a great question. Now, if you have a credit card and you don't use it, it's not necessarily a bad thing because it shows that were able to access credit and you never had a late payment. Typically, you do want to spend it and use it a little bit, and the rule of thumb is you want about 30% utilization, meaning that if you have $1,000 credit card, at that $300 threshold, it's really, really good. Now, if you do need to use your card from a day-to-day perspective, and this is your main methods to pay for everyday goods, and you use up 90% of your credit limit, that's okay. The main goal here is you want to ensure that you pay your balance on time and not have any late payments. Now, what the banks and most lenders look for is, we call it the 30-day, the 60-day, the 90th day. How many times were you late during that duration? So if you're late a couple of days, but you remember to pay back, again, it's not great, but that's totally okay. Where it starts becoming an issue is at the 60th day mark, you still haven't made a payment. At the 90th day mark, you still haven't made a payment. Or if you surpass that, that will significantly impact your credit, not so much around how much you spend. So to sum it all up, again, I wouldn't worry too much about how much you're spending within the card. Of course, the lower the better, but as long as you're paying your card on time and you're within your limit, that's the most important thing.
Great. And then a follow-up to that from the chat was, are there any expenses that should not be made with a credit card?
Yes and no. So as long as that, again, it fits your day-to-day expenses, put it on the card. There are some charges that you may not be aware of. So for example, in Canada, if you buy a lottery ticket on your credit card, that is considered like a cash advance, and people aren't aware of that. So that question is more around understanding the types of transactions and that it may incur different types of fees. But as long as you're able to use the credit card for purchases, that is totally okay to go on your credit card.
Great. Okay, so we'll go back to some pre-submitted questions. I think we talked to this one. Okay, so one individual asked, is it better to use just one credit card or have multiple?
Yeah, that is actually a great question. And the answer is still, it depends. So if you prefer to put all your expenses in one card and that's going to help you keep track, that's totally okay. Now, what a lot of people do is they use different cards for different purposes. So for example, I have one card for groceries. I have one card for gas and everyday expenses, and maybe one card for travel or to buy things from a foreign country. That's totally okay. So I wouldn't say that you need to worry too much about having different spends on different credit cards. The main thing here is you want to keep track and make sure that you're not losing sight on what you're buying. But what you don't also want to do is open so many credit cards thinking that you're going to speed up your credit score that way. Really, again, it's around how long you've had the credit and how consistent you are at paying it back. But if you have different purposes on which card is intended for, and there are cards out there that have different rewards. So one card may have higher rewards for gas, one card may have higher rewards for travel. It's totally okay to have both cards and that you use it for different purposes.
Great. Okay, I'm going to combine now a question that we got in the chat with a pre-submitted question. This is around increasing your credit limit. So how does increasing your credit limit affect your credit score? And is it standard to wait for 6 months or for a specific period of time before increasing credit limit?
Yeah, that's a great question. So back to our point earlier about utilization. So of course, the bigger limit that you have, and if your spend is now getting smaller relative to your credit limit, that does, in theory, help with your credit score. But I would say that I wouldn't worry too much about it. So you don't need to purposely go in and increase your credit limit just so that thinking you're gonna increase your credit score. But if you do need that higher limit in case you anticipate a big spend coming up, or you just want that flexibility to be able to have access to that credit, I would think of increasing your credit that way, not so much about what the impact is on your credit score. And sorry, what was the follow-up question?
Is 6 months typical to wait?
Yeah. So yes, if you are able to show, like if there's a difference to your financial circumstances. So for example, let's say you got a new job that's maybe higher paying than your previous one when you apply for the card. You can go in after 6 months to say, hey, I have a change in circumstance and I would like to see if I can access more credit. If your circumstances are the same, 6 months really isn't a long time. That's going to change your credit history or your credit score. And what the banks will typically do is, or the lenders rather, is that if your credit score does increase during this time, you may be notified around a pre-approval. So we might send you a letter. There may be a phone call to say, hey, Abby, I know your credit card's $1,000 right now, but you've actually been pre-approved to $3,000. So that's another sign that your credit score is improving and that the bank is willing and wanting to give you more credit.
Okay. An individual asked around credit card options. What are the best credit card options for newcomers to start building credit history? Or are there specific things that newcomers should be looking for?
Yeah, that's a great question. So typically, a secure credit card is a great place to start because that's the easiest product for you to get access to credit. Now, there isn't a specific type of credit cards out there that will help you build credit score faster, whether it's cashback, reward, or travel rewards, or any other benefits. Those would depend on the card, but there isn't a specific card per se that's going to help you build credit faster. But I will say a secure credit card is a great place to start, just so you have access to credit early, and then you can build that credit over time.
Great. Okay, so someone asked before the webinar, how often should I check my credit report, and how does this impact my credit score?
Yeah, great question. So every time you check your credit score or you apply for credit, it does bring your credit score lower by a little bit. Now, it is also important to check maybe once a year, maybe a year and a half, just to see if there's anything suspicious or if anything that isn't going right with your credit. But I wouldn't be too worried about the score itself or checking it too often, as long as you continue that positive behavior of paying things on time, not overextending your credit. That's going to build your credit score faster. So I would say in summary, like a year and a half, that's probably a good spot. And you can check your credit score through Equifax or TransUnion for free in Canada. So don't do it too often, but every year, kind of like a financial checkup, it's probably a good idea.
Right. Okay. So another pre-submitted question: if you have a period of bad credit history, how will that affect your future with things like home ownership?
Yeah. So having a lower credit score could impact the borrowing amount and the type of credit products you have access to. So for example, in Canada, we have a standard mortgage, which is a term reducing loan. And we have something called the home equity line of credit, where once you borrow and you pay back, you can re-borrow again at any time. Now, clients typically with a higher credit score will be eligible for both products. Whereas clients that may not have such high credit score, they may be limited to the term reducing loan only. So it is very important that you start building credit early and to ensure that you show reliability and that you can pay back things on time, and hence you're going to have a higher credit score. Now, if you do happen to start off in the wrong foot and maybe credit's new for you and you weren't on top of things, just remember your credit score is a financial snapshot. So you can fix that over time by demonstrating that going forward, you can pay things back on time and staying within your credit. And over time, you could fix that bad credit history with good habits down the road.
Great. Okay, we'll just ask a couple of more questions. So if you have any further questions, ask them in the chat now. But I'll go to a pre-submitted question. Does closing a credit card hurt credit score?
So it depends. If you have a credit card where you have a long credit history, closing that off does impact your credit score because you've had that relationship, you've demonstrated that you're able to pay it on time, or maybe if you didn't even use it at all, and you've had it for say 5 years, closing that off does remove that from your trade line, which then in theory does impact your credit score. Now, if you have a whole ton of credit cards out there and you don't use 80% of it, that's a good sign to close things off. I would do it that way, but I wouldn't be so worried that I have to limit myself to just 1 or 2 cards to build my credit. But it is very important to be mindful which credit card you're closing and why, and you want to avoid the ones that have a long credit history.
And this is a question from the chat. I know we're talking a lot about credit and credit cards today, but this individual asks, is a credit card the only way to manage daily expenses for newcomers to Canada?
Yeah, that's a great question. So you can manage your day-to-day expenses through your debit card. The debit card and the credit card serve a similar purpose, whereas the debit card requires the funds to be available in your account right away. Whereas the credit card, you have a grace period to pay back the funds. Now, both options are good you do have access to track your day-to-day expenses, say through the mobile app. But, credit card, so the short answer is no, you can do it with your debit card as well.
Getting a few more questions from the chat that we'll just try to get through before we wrap up. So someone asked, if you want to apply for a loan, does it matter if you have a secured or unsecured credit card? Is there an impact on that?
There's no impact on it. Now, it depends on how long you've had the credit cards for. So I'll give you an example. If you're new to Canada and you currently don't have work and you were granted a secured or unsecured credit card, 6 months later, if your financial circumstances are the same and you want to apply for a loan, that may be more difficult. Having either product is a tool to jumpstart your credit history, but it doesn't necessarily say which product is going to help you get a loan sooner. Really, it's around that habit. It's about how long you've had the product and what your financial circumstances at the moment when you're applying for your credit.
Right. Okay, we've had a few questions on this, so I think this is probably a good place to end. And thank you, Jackie, for answering so many questions. But a few people have asked about opening an account with TD. So how can you open an account with TD before you arrive, or what should you do to set yourself up so that when you arrive, you're ready to go?
Yeah, that is a great question. We are working on enhancements where we can open an account at TD before you arrive. Now, as a newcomer, we do have account packages at TD where it benefits you. So at TD, we have a New to Canada package where you get 12 months of account fee waived. You do need to visit one of our local branches to take advantage of this offer. But we are working on ways that we can implement so that you can open your account prior to arriving to Canada. So at this moment, it's a work in progress. However, when you are in Canada, we do welcome you to visit one of our local branches to an advisor for us to understand your needs and to help you sign up for the New to Canada banking package.
And can you set up that appointment before you arrive so that you have it ready to go?
Yeah, so if you visit our TD website and book the appointment, you can book the appointment ahead of time. And then when you do arrive, then it's a seamless approach.
Great. And I know that TD prides itself on the fact that at different branches, there are advisors that speak many different languages. So you can use, I think there's a TD tool to look for a branch where you're planning to be and find an advisor who speaks your language if that's important to you as well. Okay, great. Well, I think we'll wrap it up there. Thank you so much, Jackie, for taking so much time and for that really informative presentation and for answering so many questions. Hopefully we can see you again.
Yeah, no, thanks for having me. And I hope everyone in this session today found the information helpful. And again, if you need any help at all with banking in Canada, please feel free to contact any of our advisors at TD, and we'll be more than happy to help.
Okay, thank you so much. And thanks everybody for joining and asking your questions. And we will see you again next time.
Bye now.
Everybody, bye-bye.